Everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the Canadian marijuana sector. Okay, so we haven't done a marijuana sector video in a little while because they are in a bearish downtrend right now, and so they've been bearish for the last few weeks, and so unless you have a short position, the best thing to do has been to stay away. And so I'm going to show you why, and then the be on the sidelines in cash waiting for the key level to load is the best position to be in for these marijuana stocks, as opposed to holding while they're experiencing a downtrend right now. They could be setting up. Some of them are heating up, but others are clearly signaling more downside risk. So first up, let's look at Canopy Growth, arguably the #1 cannabis company in the world. Ticker symbol TWMJF on the over-the-counter. I'm going to be showing you all over-the-counter charts. Many of these trade on the Toronto Stock Exchange. These are all licensed Canadian marijuana sector companies. They've all been licensed or have applied for license from the Canadian government. And so, yeah, if you look here at Canopy Growth, the big thing is it's below key moving averages on the chart. So it topped out over here in the second week of January, on January the 10th, and then notice how it pulled back and started this downtrend. Well, once it got below the middle Bollinger Band on this candle, once it got below the dotted purple line, that signaled that it was a new downtrend starting. It failed to hold middle Bollinger Band support, and it's been having a difficult time heading higher ever since. It did bounce off of the 100-day simple moving average on the 5th, and it got back to this green line here, which is the 50-day simple moving average. It's currently at 23. That is the huge level to break. Notice how the candles now, all these real candle bodies are forming below the green line. It has turned into resistance. It was trying to hold it here with the close above, but it failed to do so. And so notice how Friday's red candle closed below the pink line. So as long as candles are forming below the pink line, the signal is to be either short or on the sidelines, because it is a risk to hold long. It signals more downside risk. And so in order to head higher, it has to get above EMAs 4, 8, and 13 and the 50-day simple moving average, and then it has to turn the middle Bollinger Band at 23.84 into support. Similar if you look back here in December, okay, so it was trading below the middle Bollinger Band, and then once it got above, the uptrend started. So now that it's below the middle Bollinger Band, it has to get back above that level to get a new uptrend going. So right now, you're looking at more downside risk. It needs to hold the key support level it's at right now. This has been the huge support level. So if it drops below 21 here, then you're looking at, the next key close is all the way down here around 1950. You could see both these candles closed at that level. If that level breaks, then you're talking about a potential drop down to that 100-day simple moving average at 1764. Okay, let's look at ACBFF, Aurora Cannabis. This is the company where Corona, the Constellation Brands, the maker of Corona, took a 10%, $200 million stake in this company. And as you can see, it's under pressure as well. It formed this double top over here. It came up, it hit a top, came back up, hit that top again, and then it pulled back. And so now, unfortunately for the bulls, and I am bullish on the marijuana sector, so this is the last thing I wanted to see, was the sector breaking down. This isn't what everybody wanted to see that's long marijuana, but the bottom line is that for the marijuana sector, you have to get on the sidelines when the chart breaks down. The marijuana sector generally runs cyclically. It runs during certain times of the year, and then during other times of the year it cools down. That happens, and so right now it's in this cool down period. But the bottom line is Canadian sector has legalization coming up in July, and so there's a lot of catalysts to get the sector moving. Just right now it's under pressure, and unfortunately you have a chart like this here where Aurora Cannabis closed below the green line on Friday. That is not what everyone wanted to see. That's the 50-day simple moving average at 841. That signals more downside risk. It's a signal the bears are in control. The buyers aren't stepping up. Look at the volume. Okay, so either all the marijuana bulls have already loaded and now they're just hanging on, but they're not stepping up and buying here, because look how small the volume was. Nobody was loading, and instead of it, if you look over here, there was light volume, and then the green volume came in and it took off. But instead, you have light volume, and then you had the red volume, and that sent it lower. That's not what you want to see when you're a bull. So going forward, it has to get above 840. If 840 turns into resistance, that's going to signal more downside risk, and then you have the lower Bollinger Band, and then you have the closing price here. on the bottom of this candle is the next key level. It's lining up with the lower Bollinger Band here at around 675, and if that breaks, you have the 100-day simple moving average at 588. So in order to get heading higher, it has to get above that 50-day simple moving average and above EMAs 4, 8, and 13. You know, you can see how the orange line has been major resistance. That's at 885. That's the huge level to break. And once you see it close above that level, it should signal that, okay, yeah, the chart's finally heating back up. And this could happen at any time. It could reverse. I have a lot of faith in the Canadian cannabis sector, but right now, when the charts are signaling downside risk, it's best to follow the charts. Okay, follow the chart and not the heart. And so here you've got the middle Bollinger Band at 940. It has to get above that level to get a new uptrend going. Okay, so the downside risk is it drops down to $6. All right, so let's look at APHQF here. This is Afria. This is one of the top cannabis companies in the world. As you can see here, it has the same bearish pattern. Okay, so and look how it has, you know, increasing volume as the share price is dropping lower. So once again, the buyers didn't step up as it had the sideways pattern as it was trying to hold support, and they're driving it lower. And you know, there was a public attack on the marijuana sector. A hedge fund came out and said they were attacking the marijuana sector, and ever since they said that, it's been under major pressure. And so, you know, you can't beat the big money. You know, you just have to, you know, most traders are just along for the ride, and so that's why we follow the charts, because we're not in control. We're just jumping on and off depending on where the charts are signaling. And so when this middle Bollinger Band broke down here and the candles got below that level, below this dotted purple line, notice how when there was an uptrend, all the candles are above the dotted purple line. This candle changed the trend. These candles bearish change in trend, and it's been downhill ever since. You know, there was a warning to get out, and people didn't take it, and now they're holding on, and it's sinking lower. Where's it headed? It's headed for the 100-day simple moving average at 1023. All these are lined up now to bounce off that 100-day simple moving average. It should get a technical bounce off that level. If they do not, it would be a major red flag, because then you're talking about a drop down to the 200-day simple moving average. So it's going to be really crucial. They blew right through the 50-day simple moving average. I thought they would get a bounce off of it, but as you can see here, you know, most of these marijuana stocks broke right through and it turned into resistance. That is not what you want to see. So if that happens again with the 100-day simple moving average, if you see the same pattern where they break below and then the gold line turns into resistance, it's going to signal more downside risk. They could drive it all the way down to the 300-day simple moving average at 644. That happens many times, and then they bounce off that bottom moving average and then finally head higher. I'm not saying it's going to happen. I'm just saying that this 100-day simple moving average has to hold for the bulls. If it breaks, if you see it drop below 10, it's going to be major downside risk. It could drop all the way down to 7. Okay, let's look at MEDFF. All right, now this is another, you know, one of the top marijuana companies in the world. They're the big dogs, and you know, they were actually heating up, and so it was unfortunate to see this chart break down. You know, it had RSI back above 50, Fasto above 50. You know, you had the bullish crossover starting on ADX with the green line crossing the red and the black line, but the red line took over. The bulls took over, or the bears took over really hard on Friday. This is not what the bulls wanted to see. This was not good. So you had this huge run. Look at the big run up. You know, multiple. This was running. You know, one of the few. This was bucking the trend. I just showed you the big dogs here that were all dropping, and while they were dropping, MedRelief was heading higher. It was really showing some strong, you know, breaking out of the pack, like they were wanting to be the leader of the sector. And then on Friday, bam, the bears struck hard. Notice the increase in volume. You know, there was a big volume spike on Friday above the previous candles. That's not what you want to see when you are a bull. Notice the bearish pattern that formed. It formed bearish one black crow reversal pattern, and so this is a strong reversal pattern. Notice that the open on Friday is below the close on Thursday. That's a major red flag. You know, you had a slight gap down open, and then bam, they drove it down. And the big thing that signals that this could go lower is that they closed it below the middle Bollinger Band and below the 50-day simple moving average. You know, it closed below 1626 and 1633. Who is they? They is big money. They are the people that have computer algorithmic trading programs who account for 80% of the trading in the markets. And the programs are set to either hold support or break support. If they hold support, it's a signal, okay, yeah, this could bounce and it's going to be strong. If support breaks and it closes below, it's a signal that the program's set to sell. We cannot beat the computer programs. The machines are in control. What we're doing here when we're following these moving averages is all we're doing are following what the computer algorithms are doing. They buy and sell based off of these moving averages and key resistance and support levels. And so we're just following that manually. And so basically, it's a red, to make a long story short, that this is a red flag on Friday. It would have been much better if it closed above both levels. I know it's such a small nuance to be, close at 1619 as opposed to closing at 1627 or 1635 or whatever to be above that green line. But just a few pennies could be the difference in the chart holding up and breaking down. So going forward, all right, so above 1630 is going to signal, okay, yeah, it could bounce off of here and then a new uptrend could begin. And it still could totally do that. And so it's going to be very, very crucial this week for traders of MEDRelief that it holds this 50 support zone. It stays above this level. If you see it drop below 1630, that's going to be a major red flag. If it breaks below, because it's below EMA 4, if it drops below EMAs 8 and 13, and you see it get below 1588, that you could see a drop back down to that 100-day simple moving average at 1332. So it's still right there. It's right in the zone where it could hold support here, but this is the crucial level. MEDFF has to bounce off of this level on Tuesday, or it could have more of a pullback. Because the thing is that this is breaking out while the other ones are breaking down, and it's going to be really hard for MEDFF just to break out all by itself and have a really strong uptrend while all the other ones are being brought down, especially since now there are ETFs that are trading all these stocks in a basket. And so when you start getting ETFs going on a sector, the entire sector will move together based on the buying and selling. And so right now they are selling all these stocks, so it's very difficult for any of these to get going on a good uptrend. That's why MEDFF was looking nice, and then it finally broke down, and it could catch up with the other ones to the downside. Let's look at PRMCF. This is Coronis Group, and then you could see here it was trying to hold the middle Bollinger Band as well. Notice how it got above the dotted purple line last week, and then it dropped back below on Friday. It failed to hold support. It closed below EMAs 4, 8, and 13. If you follow our analysis, if you're in our chat and you're following, like our trading theories, our strategy is that it's a risk to hold anything that closes below EMA 4 on the daily chart overnight. And the reason why is you look at this candle right here. The candles are above EMA 4. They close below. What happened? Look at all these candles that drop below. Now check out how all of these candles right here are all above the pink line. All right, 1, 2, 3, 4, 5, 6, 7, 8 candles in a row above the pink line. And then what's the ninth candle? The ninth candle is below. That signals downside risk. They held it for all those days in a row, and they finally let support break. That's your signal. That's your clue. That's the market makers telling you, get out or get short or just get on the sidelines. It would be risky to short this as well, because who knows, this could pop up here. But the bottom line is it's just best just to get on the sidelines. There's too much indecision right now, in my opinion, and I think that if you have some patience, you might be able to get some better entry points on these plays. Look at, as long as this 50-day simple moving average at 680 holds, then it could bounce off of this level. It has to get above the middle Bollinger Band at 750. If 750 is resistance for PRMCF, it's going to signal more downside risk. Okay, look at OGRMF. All right, so this one is, and I'm going to start getting into like stocks that trade less than, but these are more of the penny stocks. They're not, I just showed you the best of breed, and these are still quality compared to a lot of the OTC American US stocks that are cannabis stocks, but they're not as good as the ones that I just showed you, and they're going to be trading at a lower value. Like OGRMF trades at $3 a share, and you're going to see that the charts are more broken down. As you could see, this has been below the middle Bollinger Band for quite some time. It failed to hold that green line. All of my moving averages and all my charts are always the same, so if you watch the videos, you'll be able to pick up quickly on what the moving averages are if you're a regular viewer. So this green line here is the 50-day simple moving average. It's been resistance, and then now it's pulled back. The candles are below EMAs 4, 8, and 13. The bears are clearly in charge, and it looks like $3 is on deck. So look for a potential bounce off of the 100-day simple moving average at 3. Okay, look at ATTBF. All right, so this is looking like total garbage right now. Look at the big pullback. This is why you got to just stay away once the bears start driving them down. You just got to be really careful, because you could get stuck holding the bag, and you know, there's no telling when they're going to reverse this. You know, they could drag this out for months. You know, you're just, sometimes it can, just as long, you know, you have a multi-month uptrend, you could have a multi-month downtrend. And so that's why it just pays to be patient, or, you know, you have to be nimble and trade. And right now, though, ATTBF looks like it's setting up. I would keep an eye out of all the charts I just showed you. This one has potential for a bounce because it has 4 red candles in a row, and it is hitting the 100-day simple moving average at 295. And so notice all the red candles, but check out before, it's had way more red candles in a row than that. It has a history of making multiple red candles, but it all comes down to holding the support level. 295 needs to hold. If it turns into resistance, notice it closed just below that level, it's going to signal more downside risk. And then what it has to do is close above EMAs 4 and 8 and turn them into support, and that would signal the reversal. So keep an eye on this one. It's trying to hold support and bounce here. If it doesn't, you know, you could get a drop down to 25 and possibly down to the 100 and 200 days, the 200 and 300 day simple moving averages. And that's why I think that patience will pay on a lot of these plays, is that if you don't jump in too early, you might get a chance to load off of the 200 and 300 day simple moving averages if they pull back that far. And especially for people that are looking at these more long term, you would much rather be loading off of a 200 or 300 day simple moving average than a 100 day simple moving average. You'd be getting in cheaper, you'd have more upside potential, especially if you believe in these companies that they're going to last. So look at BLOZF. This is the breathalyzer company. And so yeah, it did the same thing as the other ones, where the other stocks I just showed you, you know, how it got below the middle Bollinger Band, it dropped below the 50-day simple moving average, it got back above, and notice how it was trying to hold the green line here, the 50-day simple moving average, but it closed below on Friday. So that's another, you know, red flag that you know, signaling more downside risk. Yeah, and so basically, you know, you can see how it's got this long, it's got a descending resistance pattern going, and so it has to break above that line to head higher. Now it's that 50-day simple moving average is the huge support level, or the huge resistance level, and then now you have for support, you know, you're looking at down here at the lower Bollinger Band at 165, and this closing price here on the what is that, on the 2nd of February. And so you know, so if the 50-day simple moving average at $2 turns into resistance, 165 is going to be the next target to the downside. Okay, let's look at NXTTF. Okay, yeah, similar pattern. You know, notice how they all have the same pattern. That's because these are, you know, the algorithms are in control. You know, they're all trading in unison. You know, you can't beat the machines. You know, that's people that don't trade often, that just jumped in here when everything was a party time. They don't realize that the you know, things don't go straight up forever. You know, there are pullbacks. You know, there's corrections. You know, that's why yeah, it helps to learn how to trade. Or if you're riding it long, you have to have you know, you have to be able to have the nerve, because yeah, they can have some sharp pullbacks in the marijuana sector. And right now, EMA4 is still resistance. As long as it's resistance, currently at 152, it signals more downside risk. There's no sense in holding while the pattern's like this. Wait for the break above resistance, or for a drop all the way down to this 100-day simple moving average. If it drops down to $1, it would get interesting for a bounce off of that level. And then if it breaks out above the EMA8 at 157, and you see it get above the orange line at 167, that would be finally your signal that NXTTF is in play. Notice that the volume has been very consistent, very low. What you always want to look for is for a stock that's starting to run, is a bullish volume spike and then a breakthrough resistance. That will be your clue that NXTTF is finally heating up. Okay, let's look at 2 more here real quick. IMLFF. This only trades, you know, 87 cents a share. They really drove it down. You know, they were able to run it up to you know, nearly $2. You know, in that parabolic push at the end of the year and the beginning of this year. And then, you know, it formed this Eiffel Tower looking pattern, and then look what happens afterwards, the big pullback, just like Bitcoin chart. You know, this is very similar to the cryptocurrencies. The marijuana sector has had the same type of pattern. You have the same type of people that are running these you know, marijuana, that are running crypto, and they're, you know, and they pull it back the same way. That's why it pays to learn how to read the charts. If you see here, you know, it bounced off the 100-day simple moving average, failed to break the 50-day simple moving average in the middle Bollinger Band. Now you have multiple red candles in a row. As long as EMA4 at 90s resistance. It signals more downside risk. I would wait for a retest of the 100-day simple moving average at 72 or a break above the 50-day simple moving average at $1. Those are like the two. You know, I think it would be easier just to wait for it to break above $1, and you're like, okay, yeah, this is finally ready to go because it's above that 50-day simple moving average as long as it stayed above that level. Or wait for a pullback and a drop off of a key level like the 100-day simple moving average. You know, just patience. Patience will pay here. SPLIF. You're not going to miss anything. It's not like these things are all of a sudden just going to take off and you're going to be like, oh my God, I missed the boat on the marijuana sector, because the charts aren't set up like that right now. Right now it's set up to be very, very cautious and to just wait for the signal, because there's been head fakes, and the head fakes are like this pullback here, and then people loaded right here, and then boom, you had the doji and it pulled back. You know, you had the nice bounce here. It got up to the middle Bollinger Band, failed to hold, and it pulled back. And so it keeps telling you that it's not ready to go. And so a good thing to do is to draw in your trend lines. And so here I have a descending resistance line, and then you have your descending support line, and you know it forms a clear channel here. And so what has to happen is it has to break above this red line to head higher. And so if it runs back up to the red line and it fails to break, you know to lock in gains. That's the top of the channel. And so what you look to do, you look to sell at the top of the channel. You know, top of the channel, sell, load the bottom of the channel, sell the top, load the bottom, sell the top, and then if it comes back down here to that 100-day simple moving average, you're looking to load the bottom. You know, so that our theory is entry point is everything. And so if you get a good entry point, you are golden. But if you get a bad entry point, you're behind the 8 ball from the beginning, and then you're managing a bad trade. And so it just pays. There's thousands and thousands of stocks out there, so you might as well just have patience and wait for a key entry points where you know you got a good entry, and that way you're in the driver's seat. And so yeah, if you'd like to learn more about how to time your entry points, how to use a 15-minute chart to time, because we find key resistance and support levels on all these daily charts, but we're trading off of the intraday charts. If you'd like to learn more about that, check us out at our YouTube channel. I'll post the link below the video.